Welcome back to my Biz Setup Series. Today we're getting into step 2. Now that you understand corporate compliance because you've watched the intro video, and now that you know the 7 steps overview and you've had a chance to do your research, if you haven't done all of those things yet, you can still watch this video, but be sure to go check out the playlist for this series so that you can know what comes before, because all that sets up one of my favorite conversations for businesses, and this is choosing the right corporate structure for you. Now this one is a little bit intense because it's going to require a lot of thinking. There's so many options that you have, so that's why I'm wearing my comfy clothes and got my coffee here. I had to rev up for this one because we have a lot to go over and I want to explain it well, so let me get a sip real quick. I'm ready. So this step number 2 in the 7 steps to setting up your business in the Biz Setup Series. This step is crucial. I'm not going to belabor my analogy about baking. If you know, you know. But I will say that choosing a corporate entity will influence a lot. So it's going to, just like in baking, when you choose what you're going to bake, it's going to influence the processes and the systems. Like if you're going to bake a pie, bake a cake, bake a tart, make a custard, petit fours, Danish, croissant, whatever you're gonna bake is gonna influence the ingredients, the time that you're going to need, the process, all that good stuff. The same with choosing the corporate structure. It's gonna influence your reporting, the kinds of records you're gonna need to keep up, your tax filings, your tax filing date. A lot of management decisions are going to be based on the kind of corporate structure that you use. So it's important, and it's important to know the options. It's not that it can't change, but it can be hard to change in the future. And inevitably, as your business grows, you're going to need to make some adjustments. You may start off with one structure, grow to a certain scale and say, okay, now it's time that I move to this next level or this next league. I need to transition here. So even managing the corporate structure that you have right now correctly, that's going to be key to having things in place to make an easier, more smooth transition to another setup. For instance, if you're a sole proprietor, having the right records in place and just having things running well is going to make it simpler than it would have been to maybe transition to an LLC or a corporation, or if you are an LLC and need to become a partnership because or a limited partnership or a limited liability partnership because of bringing on partners, that's going to require some changes. Having the right structure in place now is going to help bridge the gap to the next structure. But for today, we're talking about getting set up. There are 4 types of entities that you can choose from: a sole proprietorship, a partnership, an LLC, and a corporation. So what are these? You probably are aware of them, but we're going to go over them as a review and talk about what kinds of businesses typically use these structures so that can help inform your own decision. So a sole proprietorship is a business in which someone owns an unincorporated business by himself or herself. One person owning and running a business that is not incorporated or does not have another type of legal entity like an LLC or a limited partnership set up. Per LegalZoom, here's a good explanation that I really liked, so I wanted to share it. A sole proprietorship can be viewed as a flexible option for those who want to feel out a business model, said Stephen Weiser, a director of business law clinic at the DePaul University College of Law. A sole proprietorship offers control and freedom for business owners, but because there isn't a clear division between the owner and the business, individuals who choose this option can be held personally liable for business activities. That reminds us of what? The corporate veil. Exactly. So when you have a sole proprietorship, you're not registering a business entity. You're doing business. You are the business. You are the business entity. And like Mr. Okay. Yeah. Like Stephen Weiser so aptly said, this is a good option for people who want to try out a business model and see if it's going to be working for them and viable before they set up an official corporate entity, right? So some common examples of people who choose to operate as sole proprietors are going to be freelancers, like freelance writers, freelance designers, a person who maybe is a housekeeper or someone who has a cleaning business if they do solo, bakers, maybe someone who works for Uber or Lyft. Another example would be bakers or caterers who are working solo, a personal chef. Also, you can be a consultant, a coach, photographer, auto mechanic that just works independently. All of those are options, examples of people who will start off as sole proprietors. So let's say you're looking at becoming a personal trainer. You're not sure how it's going to go. If you want to do it long term, you want to test it out for a year or two, you can do that as a sole proprietor and then say, okay, this is something I really want to do. Maybe I want to hire some other people to be trainers with me in my company, and I would feel better with liability protection setting up an LLC or a corporation. You can, or you can operate as a sole proprietor. There are several restaurants, maybe mom and pop type places, people who do catering businesses or do event planning. They are sole proprietors. You have employees, you pay taxes, you pay your payroll taxes, you do everything a corporation or an LLC or a registered business entity does, but it's you. The trade-off is that you don't have a corporate veil of liability protection. Now, you can get liability insurance, but since you are the business, if your business ever ends up in litigation, your assets are the business assets are your assets. And so you don't have that corporate veil of protection operating a separate entity to protect you from any liability or debts, liens, or issues the business encounters because it's you. So, in review, a sole proprietor is when you yourself run the business without setting up a separate legal entity. It's a good flexible option for people who are testing the waters or people who don't have a business structure that really has a high liability impact, either because it's small or those kinds of legal liability issues just don't come up. If you're uncertain, you can always speak with a lawyer in your state and see if it would be recommended for you. For me and myself, I will always at least set up an LLC, if not a corporation. I have learned enough and seen enough over the years. I'm a risk management person. I like to mitigate risk as much as I can, but I can see where you can be quite successful and have a very easy, simple way of it, running a business just for yourself as a sole proprietor. That's definitely an option. Making good money, not trying to maybe expand and save the world. Good income for you and your family. Was another plumbers, lawn care services. Those options are good for sole proprietors. Low risk, low liability, money saved up in case of litigation, good contracts and insurance in place, and a good lawyer on hand. You can work a sole proprietorship really well. But that's option number one. Next, we're going to talk about partnerships. A partnership is a business that's jointly owned and run by multiple people. So just like a sole proprietorship doesn't have any state registration, a general partnership is basically two people instead of just one, two or more people running a business together. So everything I just mentioned with sole proprietor, you could do as a partnership. Two trainers go in together. Two people start a restaurant. Two people who are partners running a limousine company. All of those are options, things that you can do as partners as well. Two event planners working together. Now, whenever you're going to, when that's the case, all the partners have equal percentage of shares and responsibility, and the same thing. You're not setting up an entity on the state level. You're not registering another type of corporate entity. It's just you all doing business. You are the business. So the same rules apply as a sole proprietorship. There's not that liability protected from that separate artificial business entity. You want to make sure you have good contracts, good insurance, pristine tax tax, financial, and legal operations, permits, and regulations in order, and do business well. It's still good for businesses that have low risk and low liability. But again, when in doubt, contact a good lawyer. And I will have a video out. I've got to put this on my list, make sure I do this soon. And I will be doing a video if I haven't done it. If it's not ready now, be on the lookout for it. If I have it ready, it'll pop up as a notification. If not, be on the lookout for it, because I have some really great tips and strategies for choosing the right kind of professional to work with, because there are lawyers that know lots of different things. Not every lawyer is good for every situation, because there are specialties, and some people, we want to choose the right ones. We want to choose people who are really going to be for us in our corner and excellent at what they do. And I've learned some strategies for choosing the right professionals to work with you. So be on the lookout for that video. But at any rate, you can do general partnerships without setting up a corporate entity. Now, there's another type of partnership called a limited partnership. And that's where you will have people who are silent investors who do not make day-to-day decisions. They could be hired as an employee to work for the entity, but they're not managing in the organization. They're just investing, and that would be a limited partnership. In those cases, you do have to get a certificate of partnership or do some kind of organizing document for a limited partnership at the state level in most states. If you sign up for my compliance assessment service, Biz Compliance Assessment on businessadvocate.co, I will help you figure that out. And then there's another type of partnership that doesn't apply to most of us, but it does bear mentioning, and it's called the limited liability partnership. So firms like law firms, doctors' offices, and architectural firms, maybe engineering firms. This is when you have multiple people who are partners, but you want to protect each individual from any legal liability and debt issues of the other partners. So all the partners share ownership and management, but there's a level of protection for the partners. If one partner enters into a legal issue, their own personal assets are held in question, but each partner's assets are protected from abuse or legal issue, abuse of the company or legal issues, liabilities, and debts of the other individual partners. Okay, so that's a limited liability partnership. Not going to be super common. Most of us are going to do general partnerships or limited partnerships, but it's good to know. Now we're talking about some LLCs. LLC is a word that's out there a lot now. Whew. And they do have their merits. In fact, The Advocate is an LLC. It's a business structure that is allowed by state statute. And so owners of an LLC are called members, and the formation of a limited liability company, LLC, separates and distinguishes the members from the business entity. So the members, there are single member, you can have a single member LLC or a multi-member LLC, and then you can have a member managed LLC where the members run it, or you can have a manager managed LLC where the members invest, and then there's a manager who does the day-to-day operations and the members are silent partners. Some common LLCs are professional services like consultants, CPAs, consultants, certified public accountants, or tax professionals, advisors, counseling service, and then products and retail companies. For instance, eBay, Pepsi, Sony, and Nike are all LLCs. Solo coaches, consultants, and lawyers are also very common examples of LLCs. So I kind of set it up because that's what I saw a lot of other people who are doing stuff similar to what I'm doing set up. And it's worked out very well. The way that LLCs are taxed is going to be, we're going to get into that in another video when we talk about setting up corporate things. But it does bear mentioning. So sole proprietorships, general partnerships, limited liability partnerships, and limited liability companies are what's called pass-through entities regarding taxes. So you are going to pay taxes on the income of the business yourself. And also one type of corporation. We're about to talk about corporations in a second, so I'll mention it there. So when you do a tax return for an LLC, you don't do a separate corporate tax return. You declare the income and pay the taxes yourself. So it's what's called a disregarded entity, meaning that for the purpose of taxes, the corporate business entity LLC is not regarded. It's the owners, the members that will pay the taxes. Now, the last type of corporate entity is the original VOG, a corporation. And a corporation is a separate artificial entity that's completely distinct from its members and owners. Corporations are completely distinct from the members and owners, and they're unique from partnerships, sole proprietors, and LLCs because they're fully separated and distinct. They pay their own taxes. They can enter into contracts and incur debts and into litigation separately from their members. Now, with an LLC particularly, it can enter into contracts and litigation separate from its members, but the taxes are paid by the members. Okay. Coca-Cola, Toyota, Microsoft are examples of corporations, and any of the business entities that we've talked about can be set up as corporations as well. And that's the cool thing about this. I can set up the Advocate. I can choose to change to a corporation if I want. I can start a bakery and set up a corporation. If I want that ultimate protection, if I want the business to pay and handle its taxes, I receive dividends as an owner, maybe owning stock, and I receive my compensation, but I want it to be separate. It can. There is a woman that I've kind of studied under. I've not finished the program yet. She has a program, educational program to train enrolled agents, and she set hers up as a corporation. Some people do that as sole proprietors, some do that as LLCs. There are some tax advantages depending on what kind of entity you set up, and that is where finding a good tax professional, a good CPA or accountant tax professional who understands corporate entity taxes can really be beneficial. Because sometimes the decision about what kind of entity you're going to choose comes down to the money in the long run. Now, you can choose the one that works best for you now, and as your business grows and you have some financials to look at, you can go find a great CPA. I recommend everyone have a great accountant or CPA or tax professional in their corner. Look at your records and compare, okay, if I were to do a tax return this way versus with this type of entity versus this other type of entity, which is going to be better for me? And then make the decision about making the switch and take the appropriate steps at that point when you get there. But again, this is a startup. This is a startup program. If you have questions about that, if you're interested in more information, post it in the comments and let me know, because that will let me know it's time to do some research and delve into that and give you some information and some strategies that you can look at. But just know that the type of entity you have is going to determine how you're taxed, and it's going to be important to have corporate records in place, good financial records in place, manage your finances well, pay the taxes well, and do it right, so that as your business grows, you can assess if you should or need to change your corporate structure. And sometimes there are just some benefits that you can take care of. Tax laws change. May not be worth it to change it, but it's good to just have that in mind. And so I mentioned that because there are two types of corporations. You've heard of S and C corporation. That's not two types of corporations. It's one type of corporation, but it determines how you're taxed. S corporations pass on the taxes to the shareholders. So the shareholders are responsible for paying the taxes for that entity. A C corporation is when the corporation itself pays for its own taxes, and then the shareholders will pay taxes, but only on their own earnings as shareholders. If you have an S corporation, typically different shareholders each shareholder will have a percentage that they own. And so if someone owns 51% of the interest in that business, that shareholder pays 51% of the taxes on the income, less any deductions for capital losses or liabilities and debts and things like that. Okay. So that's where the difference is. I bring that up just to say, when you hear S corporation and C corporation, it's about how those corporations are being taxed. There are people who have one owner in a corporation. They just, hey, we're going to do it. I want that kind of protection. High liability type companies, you might be one or two owners, decide to set up a corporation because you know where you're going, you know your objectives, you know that you want to be able to sell stock in your company, and it's advantageous to go ahead and set up as a corporation, or you just want that ultimate protection and the tax impact is not going to be that big for you. That's cool too. Okay, so a major factor in the kind of corporate structure you choose is going to be liability. That is the whole point of, I'll say one of the fundamental points in choosing the type of corporate structure that you want. What kind of liability protection do you need, and which corporate structure is going to be the most advantageous for that? So, for instance, sole proprietorships have no liability protection in and of themselves as far as the type of entity that it is. There's no separate business entity apart from the owner that's operating. So you are the business. And as I mentioned before, those sole proprietors are good for people who have a very low risk of liability for the kind of business that they're doing. Now, based off of the research I've done, I've seen mentioned vloggers, consultants, freelancers, graphic designers, caterer, something like that. That's pretty low liability. Now, you can have some liability protection, some insurance, but of course, that insurance is protecting your own personal assets. But if you're doing the kind of business, photography, where the likelihood of people being hurt or being able to claim a suit is not high, you're good. And then, of course, if you have a partnership, a limited partnership is great when you have silent investors who are investing money only, and then you have some of the partners who are doing the work. And then the limited liability partnerships are great for people who are going into practice together. So accountants practicing, accountants opening up a practice together, lawyers opening up a practice together. That's an option. So general partners, also remember, no corporate entity, so no corporate veil, no business entity, so no corporate veil of protection. There is joint liability for sole proprietor. Well, for a sole proprietor, it's total liability for all taxes and debts and responsibilities and obligations. For a general partnership, the partners share that equally, or perhaps based on their percentage of ownership. So if a partnership is set up where one partner invested 51%, the other partner invested 40%, you have some kind of partnership agreement in place explaining that those liabilities and obligations and debts, and of course profits, would be split that way. So limited partnerships do provide protection for the limited partners. So remember, in a limited partnership, you have certain partners who invest only, and their responsibility is limited. Their say-so and ability to affect and manage the business is limited, all next to nothing or nothing, because they're only investing. So they have protection from the obligations and debts and whatnot because they are investing only and not managing the operations, right? Now, let's say I am a limited partner in a restaurant. I invest $500,000 for the startup of the restaurant. I'm a restaurateur. Okay. And I say, this is very promising, I'm going to invest. But then the restaurant says, hey, we could really use your help in this first 6 months of operations as our operations VP of operations to get us going. I could then be hired on as an employee of that restaurant for those 6 months or whatever time period, but that would be separate from me being a limited partner. Okay. Managed separately. So basically, the limited partners have protection, liability protection, because they're not involved in managing and overseeing the day-to-day operations of that business. The general partners have the liability. So with limited liability partnerships, all the partners are equal owners. But when you use this kind of setup, I think in most states I've seen it be set up with a certificate of partnership or something of that nature. Limited partnerships are not something I operate or deal with a lot, but I did research different states to see generally what does it look like, and there's some kind of document that you use to form it. I've seen certificate of partnership certificate of a limited liability partnership be the most common one, but all the owners are joint owners and they share in the responsibilities and debts and whatnot. However, they are protected from the individual actions of another partner. So if one partner in a law some judges for almost every case, or in some way unscrupulously pushes through cases for insurance claims as a part of a racket, to have something I read in a book, to, get tons of money from insurance claims, and then they get a lot of kickbacks. Well, if it's found out that partner did that, the other partners are protected from that one partner's unscrupulous acts, and that partner has to pay, goes through litigation, pays the debts, not the other partners. And then, of course, with an LLC, LLCs are cool because the LLC itself is responsible for the debts, liabilities, and obligations. So you have members of an LLC, a single member where there's one owner, or multi-member where there's multiple owners, and the members who are owners manage the day-to-day, or it can be a manager-managed LLC where the members are owners and they have someone who runs it, and the members maybe can make some executive decisions and whatnot. That's all going to be in the operating agreement, which we'll talk about in a later video. With the LLC, the actions, even of the manager and the members, are they have no personal liability for any litigation, debts, and obligations of the LLC itself. So if the LLC enters into litigation, has to pay a fine or whatever, not meeting an OSHA regulation or something like that, then it'll come out of the LLC's accounts, not the individual members and managers. Okay, and then we have corporations. Corporations provide the highest level of liability protection. They also have the most rigorous requirements for documenting the decisions and actions of the board of the corporation. So it provides the most amount of liability protection. Corporations have been established the longest. Can be set up in a way that all of the taxes and all of the liabilities are managed through the nonprofit. They can be set up in a way that all the taxes and all the liabilities are managed through the corporation. And so they provide the strongest corporate veil. However, as we learn in the session that we're going to do in the next couple of videos about maintaining corporate records and corporate documents, you have to do the most amount of documenting with corporations to show how that corporation is functioning and that it's functioning correctly so that you can maintain the corporate veil. So setting up the corporate structure is important, and then maintaining the right documents and processes and systems is going to be key for continuing to have the benefit of the corporate veil. All right, so this is the starting point. This is the launch pad. I've given you a worksheet that you have at the end of this, in the description box. You can download that worksheet, and that is going to guide you through just giving you some pointers and reminders. And I would say for sure, if you already know one of the things resonated with you, go ahead and look into it a little bit more, see if that works for you, and go for it. If you're unsure, feel free to reach out and let me know what questions you have. Post your questions in the comments or email me at info@businessadvocate.co. I would be glad to answer some basic questions. And as always, if you want some help working this out, working through it, researching, finding the answers that you need, you can purchase the 1-hour coaching session. I'd be glad to meet with you and help you find the information, find the professionals that would be best for you and your business. And then also, if you're like, hey, I need this to assess where I am because I think I'm getting this right, but I'm not sure, you can purchase the Biz Compliance Assessment, where you fill out a detailed assessment form. I go into depth looking at where you are, where you're situated, how's your business operating, and then providing you information from the state and federal government, from the IRS, to help you see, okay, this is where you're operating and these are the regulations that are in place. that your business should be following so that you can level up, make sure that your business is completely protected, and set up some strategy to help you maintain this compliance so that as you grow and as you dominate in business, you know that your business is protected and ready to grow. Thanks so much for joining me. I will see you in session, which session? All right, thanks for joining me, and I will see you in session 5, where we go over steps 3 to 5, 3, 4, and 5, which is all about setting up your corporate records for success. Love this stuff, guys. I'm excited to work through it with you. I will catch you in our next session.